Good afternoon, everyone. It gives me immense pleasure to welcome you all to today's enlightening webinar on definitions and TDS provisions under the Income Tax Act 2025, vis-a-vis Income Tax Act 1961. This is indeed a subject of great professional importance as we stand at the threshold of paradigm shift in India's tax framework. So, today I'll start this session with formal introduction of our Directors Committee Vice Chairman CA Vishnu Agrawal sir. Uh, so CA Vishnu Kumar Agrawal sir is a Central Council member of ICA for the term 25 to 29. He currently serves as the Vice Chairman of the CP Committee of and the Indian Direct Tax Committee of ICA. Additionally, he is an esteemed member of several key committees, including the Standing Committees, Executive Committee, Management Committee, and the Finance Committee of ICA. C. Vishnu Kumar Agrawal is a chartered accountant with over 2 decades of experience and specializes in income tax matters with extensive expertise in search and seizures, Benami and black money proceedings, ITAT proceedings, and income tax litigations. As a renowned speaker and author, he has delivered numerous lectures on direct tax and litigation matters across various platforms. He has also authored the book Landmark Judgment of Income Tax, which serves as a valuable reference for tax professionals. Regarding his leadership and contributions to our CA fraternity, he was former chairman of WRC of ICA for the year 2017 and 18. He has served 3 consecutive terms from 2010 as a member of WRC. He has represented WRC of ICA for various government authorities. And regarding his social engagement and community involvement, sir has beyond his professional committee commitments, C. Vishnu Kumar Agrawal sir is actively involved in social services and community initiatives. He is associated with Aravali Agrawal Samaj Mumbai, Lions Club of Mumbai, RVG Alumni and Parishad, Rajasthan Seva Samiti, Shri Jeen Mata Prachar Mandal. His professional acumen, leadership roles, and dedications to both the professional society a respected figure in the accounting and taxation domain. Sir, we welcome you. Your presence is highly appreciated, sir.
Thank you. Thank you, Sumit. Respected the Vapi branch chairman and today's moderator, CA Sumit Doshi ji, and today speaker Shivangi Mittal ji, and our direct tax committee back office and Namrata Jawar CA, who is handling today's webinar. I welcome all of you in this today's webinar of the TDS in the old income tax versus new income tax act 2025. Friends, today we have chosen this topic because the new income tax act 2025 has already came out, and our honorable president has already given the assent for the new finance bill 2025. Friends, we have given when the new income tax bill 2025 came, the first time the select committee for the new finance bill 2025 invited the suggestion from the ICI, and we have given the close by close suggestion to the select committee, and today I am happy that more than 95 suggestion is accepted by the select committee, which is the part of the new finance act 2025. Friends, recently we have came out with the guidance note of the 44 AB of tax audit from the direct tax committee, which is hosted on the website. I request each one of you kindly take maximum benefit of the direct tax act 2020, guidance note 2025, the revised guidance note. Friends, recently we have also came out with the ITR 1 and ITR 4 checklist for benefit of all the members, friends, and other ITR checklist in the work in the progress, and in the couple of the days we will launch the rest of the ITR checklist. Friends, one important uh, is important. We have taken the decision for the new Income Tax Act 2025. We are also printing from the Direct Tax Committee. In the couple of the days, we will they came out with that Income Tax Act 2025 for benefit of all the members and fraternity at the large. Friends, I will not take much of the time because today we will give the maximum time to the Shivangi Mittal, who is the ready for the discuss the provision in the Income Tax Act 2025, TDS provision for the 2025, as well as the Income Tax Act 1961. So I request our moderator Sumit Doshi ji to introduce Shivangi Mittal ji for the benefit of all the members. Thank you, friends.
Thank you so much, sir. Vishnu Agrawal, sir. You are
Thank,
always inspirational to the entire fraternity, and your contribution is really, really remarkable
thank
for
you,
all our professional brothers. Sir, thank you so much.
thank you, thank you.
Sir, our today's speaker, before I introduce today's speaker, we do not have with us today because of the prior commitments of our DTC chairman, CA Piyush sir, Piyush Sajed sir. He's the chairman of Directex Committee. So in his absence here, I'll introduce our today's speaker. It's my absolute honor to introduce our distinguished speaker, C. Shivangi Mittal. She is a chartered accountant by profession and passionately curious by heart and people person by nature. Shivangi represents she has a niche practice in chartered accountant, specializing tax sections like 15T and CB. What sets her apart is not just her depth of technical knowledge, but her ability to demystify complex text topics and represent them in a manner that is engaging, relatable, and easy to comprehend. She has delivered numerous insightful sessions across platforms, including YouTube, where her counts on topics like futures and options, patents, tax audits, and TDS matters. Really appreciated by the professional.
Namrata ji, I think it's Sumit connects. Sumit is not audible. So I request
Yeah,
Shivangi ji. So I so yes, Sumit said I
yeah,
think your network
yeah,
is
sir.
not.
I think,
No
I think,
problem. No problem. No problem. So I request Shivangi ji. So you start your presentation.
Okay, thank you,
yeah.
sir.
So we welcome Shivangi.
Okay, thank you so much, sir. Thank you, Vishnu, sir. And thank you, Sumit, sir. First of all, please do let me know if I'm audible and visible to every one of you.
Yes, madam.
Okay,
Yes.
thank you. Okay, so as Sumit sir said, and basically, first let me introduce myself. My name is Shivangi Mittal, and a chartered accountant by profession, obviously. And today I'm going to deliver this session on definitions and TDS provisions as per the Income Tax Act 2025 versus 1961. I would like to know if you would want this session in Hindi or in English because I'm comfortable with both the languages. So if you can just reconfirm it to me, then that would be great.
So you in English, madam, because so many people from South also.
Okay,
Yes.
perfect, sir. Thank you so much, sir. First of all, I would like to thank you for this. I would like to say thank you for this opportunity, Vishnu sir, for me to deliver this session on this platform. It's really, I would say it really feels good because I love income tax a lot, and for getting this opportunity on this kind of platform is really means a lot to me. Okay, so now I'm sharing my PPT presentation with all of you. Just give me a second. Okay. Is my PPT visible? Okay.
Yes, ma'am.
So when it comes to Income Tax Act 2025, okay, let's talk about Income Tax Act 2025. As we all are aware, on 1st of February 2025, Nirmala Sitharaman ji, our finance minister, said that they are going to introduce the new income tax bill. And on February 13, 2025, they basically introduced the original income tax bill in Lok Sabha. 21st July 2025, the Parliamentary Selected Committee, they submitted their report with lots of recommendations which were required to be done in this income tax bill. And on 8th August 2025, the original bill which was introduced was withdrawn. So what happened after that? On 11th of August, they reintroduced this bill, right? And followed by, on 12th August, the bill was passed in Rajya Sabha. 21st of August, the bill was basically notified in the Gazette of India after the presidential election. So basically, if we talk about this Income Tax Act 2025, it is applicable from 1st April 2026. So can I say that this bill is applicable from financial year 26-27, right? What was the purpose of this Income Tax Act 2025? What was the purpose of introducing this new act? The purpose was very simple. Because earlier our act was basically from 1961, right? 1961 से हमारा वो act था. Now, from 1961 till 2025, there were lots and lots of changes. Many amendments were introduced. If I talk about if I talk about TDS provisions, it was introduced somewhere back in 1970s. And since then, there were many provisions, age-old provisions were there, which were basically we were basically studying the same and or we were working on those provisions, right? So therefore, there was need to introduce new act since there were many amendments since the inception. If we talk about the flow of discussion for today's session, as the session name suggests, definitions and TDS provisions. The flow of discussion is divided into two categories only, obviously, definitions and TDS provisions. However, if we talk about Section 2 of Income Tax Act 2025 or 1961, then it is obvious we cannot cover all the definitions of Section 2 in just 1.5 hour session. I hope you all agreed in 2 hour session. We cannot cover all the definitions because even for me to cover all the definitions of Section 2, we do require at least 4 hours for me to complete or for us to understand all those definitions which are basically being part of the Income Tax Act. So what I have done for today's session, basically, I have divided, or I would say I have extracted few definitions from the Income Tax Act and created a comparison table, or I would say PPT, the presentation in such manner where we will see the comparison between the two acts. I have taken the important terms only for today's session. Same goes with the TDS provisions. The important sections have been covered, like, for example, TDS on rent, TDS on salary. Okay. So when we talk about definitions, the definitions are basically divided into three categories. Number one is your foundational definitions. Now, what do we mean by foundational definitions? The foundational definitions is very simple. It's basically which creates the foundation, the base. Like, for example, if you know, under the Income Tax Act 1961, there's this assessment year, previous year. So this is the foundation, right? We do follow these definitions since, like, if we are working on it, then these are the basics: assessment year definition, previous year definition, right? So I have covered few foundational definitions, followed by some definitions which are related to the capital asset, then followed by definitions which are related to companies. Okay. Let's talk about first discussion, which is related to foundational definition. As you can see, as per the in your screen, as per the Income Tax Act 1961, there were few definitions called assessment year, previous year, assessees, person. These definitions have been covered. And as per Income Tax Act 2025, now there is no assessment year, no previous year. However, there's a tax year, which we are going to talk about. There are assessees, there are person definition, which we will see in this session. So what is assessment year? If we talk about Income Tax Act 1961, then this is something which we need to follow for this current year, financial year 25-26. However, for the Income Tax Act 2025, we are going to follow the same in the next financial year 26-27. So I would say this is a crucial point for us to understand both the acts, because next financial year we will be covering different act. However, for this financial year, we are following the existing act, which is 1961. Assessment year. The definition of assessment year under the Income Tax Act 1961 was given under this Section 2, Clause 9, which says that it means the period of 12 months commencing on the first day of April every year. However, if we compare it with Income Tax Act 2025, this definition is eliminated. It no longer exists as a separate concept. And it is one of the major change, I would say. Same goes with the previous year. As per Section 2, Clause 34 of Income Tax Act 1961, the previous year is defined in Section 3 of Income Tax Act 1961. However, if we refer to Section 3 of the Income Tax Act 1961, the previous year means the financial year immediately preceding the assessment year. The previous year means the financial year immediately preceding the assessment year. So basically, assessment year, if we talk about, is where we do assess the income of the previous year. And for the new businesses, profession, or other source, obviously, if we are starting the business in the middle of the year, so from that date, from the commencement date till 31st of March is going to be my previous year. However, when we talk about this previous year, this concept have been replaced by the tax year concept. So now there's no assessment year, no previous year, there's only tax year. And it is one of the major change in the Income Tax Act 2025. And why we were required to do so? Obviously, to simplify the concepts. There were many clients of mine, and there were many individuals, there were many people I had conversations with, and they were always confused with the assessment year and the previous year thing. So now there's only 1 year, which is tax year from the Income Tax Act point of view. What is tax year? The tax year is defined in Section 3 of the Income Tax Act 2025. The tax year says 12-month period is starting from April 1. 12-month period is starting from April 1. So basically 1st April. And if we are starting the business in middle of the year, then from the commencement date to 31st March is going to be my tax year. And this is one of the new introduction in the Income Tax Act 2025, obviously. So what about the assessment year? Because we are going to assess the income. So we call it as subsequent tax year. So tax year, like for example, if I say financial year 26-27, if it is my tax year, then since I'm going to assess my income the next year, we will call it as financial year 27-28. We will call it as subsequent tax year. Right? So this is one of the major change as per Income Tax Act 2025, tax year and subsequent tax year. The next definition, which we are covering right now, is of the term assessee. If we talk about the term assessee, it is defined under Section 2, Clause 7 of Income Tax Act 1961. An assessee is any person which is liable to pay tax or money under the Act. An assessee, who is an assessee? Basically, the person who is paying the tax, right? And it includes those persons who are undergoing assessment proceedings. Assessment proceedings for what? For income, fringe benefits, losses, refunds due to him or other person. Persons deemed to be assessees under any act provision and those deemed to be assessees in default. So basically, if we compare the definition of assessee as per the Income Tax Act 1961 versus the Income Tax Act 2025, what they have done, the core concept is basically same, the definitions are basically same, but they have brought a more clarity in the definition. The language is quite simplified now. So if we refer to the bare act language of the act, if you refer section 2 clause 11 of Income Tax Act 2025, the definition says an assessee is any person which is liable to pay tax. An assessee is any person which is liable to pay tax or money under the act. Okay. So it is, the basics are same. However, this includes persons undergoing assessment proceedings. Assessment proceedings for income, losses, refunds due to him. So basically, if the assessment proceedings are going on me, so for my income, for the losses which I have incurred, for the refunds which are due to any individual, due to any assessee, and suppose if the assessment is going is of any other person, or loss sustained by or refund due to such other person. So basically, assessee is someone who is liable to pay any tax or money under the act, and it includes persons undergoing assessment proceedings. So basically, what they have done earlier, as per the Bail Act, this, like if the assessee himself and any other person, the language was somehow merged, I would say. However, when you refer to new section 2 clause 11, they have simplified the language. What they have done for income, losses or refunds due to him, they have created a separate statement or line for the same. And for the assessment of any other person, income or loss sustained by or refund due to such other person, we have created a separate point or I would say line for the same. And person deemed to be assessees under any act provision and those deemed to be assessees in default. Now the question is, what is person? If we refer to the Income Tax Act 1961 versus Income Tax Act 2025, there is no change in the legal meaning of the definition person. So section 2 clause 31 of the Income Tax Act 1961, section 2 clause 31 of the Income Tax Act 1961, it says person includes individual, HUF, company, firm, AOP, BOI, whether incorporated or not, local authority, or every artificial judicial person not covered above. These are my persons. However, it does not matter whether such AOP, BOI, local authority, or artificial judicial person was incorporated with the object of deriving income, profit, and gains. Okay, so if they are incorporated, it does not matter whether we are deriving income, profit, and gains in case of AOP, BOI, etc. So even if we are earning losses, we will be considered as person. The definition is same as per Income Tax Act 2025, section 2 clause 77. If you can see, if it says person includes individual, HUF, company, firm, AOP, BOI, whether incorporated or not, local authority, every artificial judicial person not covered above, whether or not such AOP, BOI, local authority, or AJP, artificial judicial person, was incorporated with the object of deriving income, profit, and gains. So there is no change in legal meaning. And if you refer to the Act language, no change in the language as well. It's almost same. in this definition. So these are some foundational definitions, I would say. As you have seen, the concept of assessment year and previous year is not there now. However, the concept of tax year have been introduced. The definition of assessees and persons is somewhat same and similar in both these acts. No such change in these acts. Now let's refer to the definitions which are related to capital assets. For the definitions which are related to capital asset, there is one change introduced by Finance Act 2025. They have included securities held by investment funds. So, if we refer to the capital asset definition, capital asset, okay, so if we talk about the clause number, under the Income Tax Act, under the Income Tax Act 1961, the capital asset definition was mentioned under Section 2, Clause 14. And whereas under the Income Tax Act 2025, the definition of capital asset is under Section 2, Clause 22. However, if we prima facie look into both these definitions, the concept is same and there is no change in legal meaning. However, let's see what does the Section 2, Clause 22 of capital asset says. Section 2, Clause 22 is as per Income Tax Act 2025. Number 1, it says property of any kind held by an assessee, whether or not connected with his business or profession. Property of any kind, it can be land or building, it can be shares and securities, it can be any asset which is held by an assessee, whether it is connected with his business or profession. It does not matter whether he is using this property for the purpose of his business or profession or not, but it can be a property of any kind, including land and building, etc. And also, if any securities held by foreign institutional investors. So if there are any securities which are held by foreign institutional investors and they have invested into the securities as per the SEBI regulations, then that is also our capital asset. There is one more point they have added as per the Finance Act 2025 as well. And also we can see the same provision in Income Tax Act 2025. This is a specified investment fund. Now, if we talk about a specified investment fund, and if they have invested securities in accordance with the provisions of the regulations made under the SEBI Act or International Financial Services Center Authority Act. So basically, if the specified investment fund, so this is as per Section 210. I guess 214, I need to check, okay. So basically the investment fund, it is mentioned in Section 200. So the securities held by specified investment fund, we have also considered, we will also consider it as capital asset. and also any unit linked insurance policy to which exemption under section 2 under schedule 2 does not apply. So what is schedule 2? Schedule 2 is basically section 10 of Income Tax Act 1961. If you remember section 10, it was related to the exemptions. So where income not to be included in total income. Now, whatever the exemptions which were allowed in section 10, you will find those exemptions in schedules, schedule 2 of Income Tax Act 2025. So if we refer to the schedule 2 of Income Tax Act 2025, you will find that there are incomes which are not required to be included in total income. And in this schedule 2, there's a serial number 2, which says, which is related to the unit linked insurance policy. And if for any unit linked insurance policy where the exemption does not apply as per schedule 2, then that is also my capital asset. So basically, if we compare these two definitions as per the Income Tax Act 1961 or as per the Income Tax Act 2025, both the definitions are same. There is no change in these sections. If we talk about the exclusions, what are the terms which have been excluded from the capital asset definition? So again, the exclusions include the stock in trade. Stock in trade, obviously, because stock in trade is part of the business. So therefore, they are not my capital asset. The items related to personal effects, the movable items, which are personal in nature. The agricultural land in India. The specified gold deposit bonds. So these are the assets which are basically excluded from the definition of capital asset. However, when we talk about the personal effects, the movable property, so there's this negative list, I would say, from mentioned in personal effects. And if it is negative list, then obviously these are my capital assets. तो कैन आई से एक्सक्लूजन का भी एक्सक्लूजन है, तो अगर माइनस माइनस है तो प्लस हो जाएगा, राइट? सो दैट मीन्स I can conclude it like if we talk about jewelry, if we talk about archaeological collections, if we talk about drawings, paintings, sculptures, any work of art, they are basically my capital assets. And when we talk about property, property includes and shall be deemed to have always been included any rights in or in relation to an Indian company. So basically, if we are holding shares or maybe shareholding in a, or if we do have any right in relation to an Indian company, including rights of management or control or any other rights whatsoever. So basically, they all are being considered as part of my capital assets. As I said, the definition is same when it comes to the capital asset definition. It's same. There is no change in the legal meaning of the capital asset definition under both the acts. So if we just revise, then stock in trade, consumable stores, raw materials held for business or profession, these we are going to exclude it from our capital asset definition. personal effects. Like, for example, the movable property, including wearing apparel, furniture held for personal use by the assessee or his family. So whatever the movable property, like for example, if we talk about, let's say, mobile phone, the car, or maybe any other items. So the movable property, we are going to exclude it from the capital asset definition. Rural agricultural land. Rural agricultural land is basically a land where which is not urban, okay, and there's this definition given in the Income Tax Act for the rural agricultural land, right? So this is not part of my capital asset, and there are some specified gold deposit bonds which are issued under gold deposit schemes, so they are also needs to be excluded from the capital asset definition. However, when we talk about the personal effects, so there are some exclusions from the personal effects definition, and these exclusions are jewelry, archaeological collections, drawings, paintings, and sculptures in any work of art. And since it's basically exclusion, negative list from the exclusion list, so these assets are my capital assets as per Section 2, Clause 22 of the Income Tax Act 2025. And when we talk about jewelry, jewelry includes ornaments made of gold, silver, platinum, or any other precious metal. So whatever the ornaments, basically whatever the jewelry we are wearing related to gold, silver, platinum, any other precious metal, or any alloy containing one or more such precious metal, whether it has precious stone or not, or maybe we can use it as a swing apparel, like maybe we can wear it as our wearing apparel, right? As a part of our clothing wear, etc. So these are basically considered as jewelry only. So this was the definition related to capital asset as per Section 2, Clause 14 of Income Tax Act 1961 versus 2 Clause 22 of Income Tax Act 2025. Now, when we talk about short-term capital assets, the definition of short-term capital asset is given under Section 2, Clause 42A of Income Tax Act 1961. And if we compare it with Income Tax Act 2025, the same definition is given under Section 2, Clause 101. So if we refer to Section 2, Clause 101, there's a clarity given in this definition. Now, what this clarity is all about? If we talk about this list, so securities which are listed in recognized stock exchange in India, the units of Unit Trust of India, the units of equity oriented fund, and zero coupon bond, these are considered my short-term capital assets if they are held for less than or up to 12 months. Again, repeating the same. So basically, securities listed in a recognized stock exchange in India, the units of Unit Trust of India, the units of equity oriented fund, and zero coupon bond, if these assets are held for less than or up to 12 months, immediately preceding the date of its transfer, then these are considered as my short-term capital asset. However, if we hold them for more than 12 months, then in that case, they are my long-term capital asset. The tax rates for these capital assets are defined under section 196, 197 of Income Tax Act 2025. The tax rates are defined under section 196 or 197 of Income Tax Act 2025. Okay, and tax rates are same. I will show you the tax rates as well. If we talk about other capital assets, basically the assets which are not falling into this category, for example, unlisted shares, jewelry, land building, etc. The assets which are not falling into this category, in that case, the holding period is 24 months. So if we are holding these assets for the period up to 24 months, or I would say 2 years, immediately preceding the date of its transfer, in that case, the same is considered as short-term capital asset. However, if the holding period is more than 24 months in case of these assets, the same would be considered as long-term capital asset. There are no changes as such in the capital asset definition, but yes, I would agree that if you read the Bare Act language, it's more simplified now. So when I was preparing this PPT, and I was basically looking into the Bare Act language for both the sections, Section 2, Clause 42A of Income Tax Act 1961 versus 2 Clause 101 of Income Tax Act 2025. Obviously, the Bare Act language is quite simple when it comes to the Income Tax Act 2025. There's this clarity given in the Act. Now, after short-term capital asset, let's talk about long-term capital asset. And obviously, for both the acts, the definition is very clear. The capital asset, which is not short-term capital asset, is going to be my long-term capital asset. The capital asset, which is not my short-term capital asset, is my long-term capital asset. However, the sections are obviously different. For Income Tax Act 1961, it is Section 2, Clause 29AA, where the definition of long-term capital asset is mentioned. However, for long-term capital asset definition, Section 2, Clause 67 is there under the Income Tax Act 2025. There's no change in this definition. It's just the clarity is there in the definition of short-term capital asset. Now let's talk about definitions related to companies. If we consider the definition of Indian company, then the definition of Indian company is mentioned in Section 2, Clause 26 of Income Tax Act 1961, whereas it is the same definition is mentioned under 2 Clause 53 of Income Tax Act 2025. So if we refer to the latest definition of Indian company, which is given in 2 Clause 53, the Indian company means a company which is formed and registered under the Companies Act 2013. The Indian company means a company which is basically registered under 2013, under the Companies Act 2013, and it includes company formed and registered under any law relating to companies formerly or currently in force in any part of India. So if there are companies which are basically formed under any law, like there was this Companies Act 1956 earlier, which we were following. So basically, if any companies have been incorporated as per the earlier act, so obviously it includes those companies as well. And if there are any corporations which are established by or under a central act or state act, then that is also being part of Indian company. And if we refer to the definition is quite simple in comparison to what it was mentioned in the Income Tax Act 1961. It's now, if we refer to the TDS provisions as per Income Tax Act 2025 and Income Tax Act 1961, let's proceed further with the TDS provisions. So now when we talk about the TDS provisions of Income Tax Act 1961 versus Income Tax Act 2025, there were many sections related to TDS, like section 192, 194 was for salary, 194 was for dividend, 194A was for interest other than securities, C is related to contractors, D, 194D is for insurance commission, H is for commission or brokerage, I is for rent. There were many sections which we used to study. However, the same has been simplified in Income Tax Act 2025. What they have done for the salary part, like if there's a TDS on salary, there's a section 392 of Income Tax Act 2025. So if we refer to section 392 of Income Tax Act 2025, it talks about TDS on salary. And for the remaining sections, which we used to study earlier, like 194, 194A, C, D, H, like this, the TDS rates have been mentioned in tabular format. So there's this table mentioned in the Act, and accordingly, the rates have been mentioned. Whether there's change in TDS provisions, I would say certainly not, because obviously all the data have been updated as per the Finance Act 2025. So in most of the cases, you will find the Act language is almost similar, or I would say the concept, the core concept is almost similar. Maybe the Act languages they have simplified in some manner. In few areas, you will find the 2 or 3 sections have been merged. Like for example, there was a section 192 and 192A. So the section have been merged where there was this TDS on EPF withdrawal. It has been merged and now it has become section 392. In most of the cases, you will find the language is quite simplified now. It's simple and easy to understand. And the core concepts are somewhat similar, but yes, there are certain changes. So if we start with TDS on salary, as we all are aware, when we talk about TDS on salary, we do deduct the TDS on salary as per the average rate, or I would say as per the slab rate, right? So what happens, like we do calculate or assess the employee's salary for the whole financial year, and accordingly we do deduct the TDS on proportionate basis. The concept is same. However, if we refer to the definition, first of all, let's talk about the section references. So under the Income Tax Act 1961, Section 192 is there for TDS on salary. However, for Income Tax Act 2025, which is applicable from financial year 26-27, Section 392 needs to be followed. I would say Section 392 is basically nothing but Section 192 plus 192A of Income Tax Act 1961. The basic provision is similar in both these acts, yet the terminology is obviously updated because there's instead of financial year, now we use the tax year. Instead of assessment year, previous year, we use the word term tax year. So the TDS on salary is deducted at the time of payment. Same is followed in the new Income Tax Act 2025 as well. So the basic provision is that TDS on salary is going to be deducted at the time of payment. At the time of payment, we are going to deduct the TDS on salary at average rate based on tax year. Okay. However, for 1961, it is obviously the rate which are basically applicable for the previous year. We are going to deduct the like tax accordingly. For non-monetary perquisites, if we refer to the section, there's this complex language which is there. It says perquisite which is not provided for by way of monetary payment referred to in section in clause 2 of section 17. So basically there's this complex language. So in non-monetary perquisites, we also do deduct the TDS, right? However, if we refer to this section 192, you will find the language is quite complex, whereas same has been simplified in this section, which is 392, and it says non-monetary perquisites chargeable to tax under section 17(1) and TDS shall be deducted. So the language is quite simplified if we compare these two sections under these two acts. If there's an assessee, if there's an individual, if there's an employee who has worked for multiple employers during the year, then what as an employer you're required to do? So as per section 392 of the Income Tax Act 2025, employer should consider the following for the purpose of making deduction. So before making deduction, the employer are required to consider all these things. What are those things? Salary received from other employers during the tax year. So whatever the salary we have received from other employers, we need to consider the same. What does that mean? Let's understand. Suppose there is an employee who has joined in the middle of the year. Like for example, this is financial year 26-27. And let's say he has joined in the month of today, September. So let's talk about September 26. He has joined in the middle of the year. So now I, as an employer, this is a new employer, okay? So what I need to do, the previous month's salary from April 26 to August 26, I need to consider his salary, the previous employer's salary. I need to consider his salary, right? And there was this one relief available under Section 89. Section 89 relief. What was Section 89 relief as per Income Tax Act 1961? So recently, since it's ITR filing due date, so I was filing few ITRs of some employees who work for, there's this bank called Andhra Pragati Gramin Vikas Bank, somewhere in Telangana, I guess. So there were many employees who have received the arrears from 1993, okay, in the financial year 24-25. So as per section 89 of Income Tax Act 1961, we are doing this relief calculations. And as per this relief, like if we have received the arrears of our salary from the previous years, then in that case, this relief is available. And according to this relief, what we are required to do, like if the tax payable as per the current like tax rates is at higher side, then in that case, we will calculate our taxes which are applicable for the previous years, and we will compare the same, and accordingly we can claim the relief. So for this relief, which was applicable under section 89, now this relief section has been changed and now it is section 157. So it's basically relief, whatever the relief is. So it is nothing but section 89 of Income Tax Act 1961. So employers should consider, like if I, as an employer, an employee has joined the organization in September 2026. So what I am required to do, first I will consider his previous month's salary from April 26 to, let's say, August or September 26. Then if there's any relief is available to him, then I also need to consider the same. His loss under the house property, his income chargeable under any other head, and whatever the TDS deducted for same year, including TCS. Suppose if your employee have purchased a car of worth value 10 lakh rupees and TCS has been deducted in his case, then he can submit the documents and we can consider that TCS statement as well, right? So we can consider his TCS and then accordingly reduce it from overall tax liability and deduct the same on proportionate basis for the remaining number of months. So that is something which we can do in case of TDS on salary. Now, if you refer to the Bail Act now, you will find that all these points are basically simplified. There's this better structure, better organization, streamlined structure. It is simplified. It is only एक होता है ना कि एक ही जगह वो आपके पॉइंट सारे मेंशन कर दिए. They have placed all points at one single place. However, if you refer to section 192, you will find there were a lot of multiple subsections given, and there's no, I would say, these points are interconnected to each other, but yes, multiple subsections are given. Quite complex, like they have basically mentioned or given the references. The same thing is given, but multiple subsections are there. Okay, so this is one of the concept is same, but obviously one of the major change you would find between these two sections, which is on TDS on salary. It is more streamlined now. Also, there was this one section, section 192A, where if you're withdrawing your PF amount and if the PF amount exceeds 50,000 rupees, in that case, TDS was required to be deducted at the rate of 10%. There was a section 192A under the Income Tax Act 1961. There is section 192A under the Income Tax Act 1961. However, as I said, section 392 of Income Tax Act 2025 is nothing, but it is a combination of section 192 plus 192A. So in this section 392, they have mentioned that 10% TDS is required to be deducted on EPF withdrawals of over and above 50,000 rupees. The conclusion point is section 192 and 192A of Income Tax Act 1961 have been merged. The section is quite simplified now, more streamlined. All the points which are basically related to each other, they have just created it as a single point and then single subsection, and it is basically part of your section 392 now. I hope it is clear to every one of you. When we talk about TDS on rent, so there was a section 194I, 194I of Income Tax Act 1961. Now, if we talk about TDS on rent, TDS on professional fees, TDS on commission, etc. Whatever the TDS amounts have been given, TDS rates have been given, it is basically now part of Section 393 only as per Income Tax Act 1960, as per Income Tax Act 2025. So what they have done in this Section 393, they have basically created few tables, right? In these tables, there's this one table which is related to for payments made to residents. Another table talks about for payment made to non-resident. Another table which talks about there are few scenarios where TDS is not required to be deducted. So accordingly, they have created the tables in section 393. Okay. However, if we refer to section 1961, there were many sections which we used to follow. Section 192 was for salary, 194I is for rent, I, TDS in case of like transfer of immovable property like this. There were many sections which we were following earlier. So if I refer to this TDS on rent, then obviously for Income Tax Act 1961, there was a section 194I. However, for Income Tax Act 2025, there's a section 393. For 393 section, there's this one table where we talk about for payments made to resident. And for this, we do have this serial number 2. Serial number 2 of this table where the payment made to resident is given, the TDS which is required to be deducted in case of rental payments is mentioned. Now, who is deductor? Who is deductor? Deductor is someone who is going to deduct the TDS. Okay. So there are two categories which is mentioned in this section 393. Okay. Let me tell you how I am explaining all these comparisons. Basically, I am focusing on Income Tax Act 2025. Okay. I am focusing on Income Tax Act 2025. So whenever I'm explaining anything, the first preference would be on Income Tax Act 2025 section. So if I say I'm explaining section 393 right now, once the explanation of section 393 is over, or maybe during this explanation, I will be comparing it with Income Tax Act 1961. That's how I'm explaining this section, okay? So I'm not focusing on, to be very honest, in Income Tax Act 1961. I'm mainly focusing on Income Tax Act 2025, but yes, the comparison is obviously there. So for the deductor, there are two categories given in this section 393. Number one is persons other than specified persons. Persons other than specified persons, and this is category 2, which talks about specified persons. Okay. Category 1 is persons other than specified persons, and category 2 is specified persons. The question is, what is a specified person? And for this, I have to refer section 402, clause 37. Section 402 of clause 37, the answer is yes. It talks about the definition of specified persons. Or basically, I would say it talks about what else is included in a specified person. So a specified person is basically any person not being an individual or achieved. Okay? Any person not being an individual or achieved. So basically, I can say company can be my specified person. But when it comes to individual HUF, if you remember the 1961 section where we talk about if In case of individual HF, that if the total sales or the gross receipts or the turnover, if it exceeds 1 crore rupees in case of business and if it exceeds 50 lakh rupees in case of profession, in that case, obviously, they are required to deduct TDS. But obviously, we need to check this limit of the preceding year, right? Preceding year. So that means, can I say, if we talk about financial year 26-27, I don't know why my pen is breaking. Okay, anyways, yes. So if we talk about financial year 26-27, just give me a second. Yes, it's working now. Huh. So if we talk about financial year 26-27, can I say, if this is my tax year, and for me to consider whether this assessee is my specified person or not, I need to check the sales, gross receipts, or turnover of the preceding year, immediately preceding the tax year. So basically, if we talk about these gross receipts, we need to check it for financial year 25-26, right? So in Hindi, if I say, अगर मैं पिछले साल का देखूं, अगर पिछले साल में किसी पर्सन ने, किसी इंडिविजुअल एचएफ ने सेल्स, ग्रॉस रिसिप्ट, टर्नओवर जो भी है आपका बिजनेस अगर वो करता है उसमें 1 करोड़ से एक्सीड करा है और प्रोफेशन केस में अगर 50 लाख से एक्सीड करा है पिछले साल में, तो इस साल में मैं टीडीएस डिडक्ट करने के लिए रिक्वायर्ड हूं. रिपीटिंग द सेम इन इंग्लिश एज वेल. सो इफ आई टॉक अबाउट individual HF, okay, and if there's an assessee who in the previous year have earned an income, or let's say sales, gross receipts, if his gross receipts is exceeding 1 crore in case of business and 50 lakhs in case of profession, in that case, this year, okay, I have to check these sales, etc. for the previous year. And in that case, this year, I have to deduct the TDS. That is my specified cost. I hope it is clear to every one of you. So, as I said, in the deductor category, there are two categories for the deductor. One is person other than a specified person. And then there is category 2, where we talk about the specified persons. Deductee could be any resident. Deductee could be any resident. And time of deduction would be at the time or payment, whichever is earlier. Let's talk about category 1. Category 1 is for those persons who are other than a specified person. This can be either you, me, or any one of us. Basically, the individuals we are talking about. Those individuals who do not have any business or income profession, who are not doing any business or profession, who are not into any business or profession. Or let's say if I'm into any business or profession, but my business income is not exceeding 1 crore or professional income is not exceeding 50 lakh, in that case, I will fall into this category 1. Because for category 2, obviously, I have to have this income which is exceeding 1 crore or 50 lakhs respectively, right? Or maybe if I'm not individual HF, then again, I will fall into this category 2, which is specified persons. But for category 1, number 1, I have to be individual HF. And also, if my business or professional income does not exceed 1 crore 50 lakhs respectively, in that case, the category 1 is applicable. And then I'm required to deduct TDS at the rate of 2%. If the threshold limit exceeds 50,000. Let's talk about an example. Obviously, it's just the language which we are studying. Let's take an example here. So from the example, let me see if I do have space. Yes. Okay. So let's talk about an example. Okay, I'm writing it here only. Category 1, where person other than a specified person. Let's talk about an individual who he is not into any business, etc. And maybe even if he's into business, he does not have any income from business or profession exceeding 1 crore 50 lakhs respectively. Okay, so he is basically a person which is other than a specified person. Now, suppose he is paying rent to someone, maybe to a company or maybe to an individual, does not matter. And the rent amount is exceeding 50,000 rupees per month or part of the month. If the rent amount is exceeding 50,000 rupees per month or part of the month, in that case, TDS is required to be deducted. But this is an individual now. Let's say if you're a salaried employee, I can be a salaried employee, and I might be paying the rent amount to someone, maybe more than 50,000 rupees. I still remember on 1st Feb 2025 when Nirmala Sitharaman ji have announced the budget. In her speech, she said 6 lakh rupees per annum. I don't know how many of you remember that speech. She said 6 lakh rupees per annum, and many of the individuals were of the view that like if the rent amount exceeds 6 lakh, in that case, TDS is not required to be deducted. Let me tell you, it is 50,000 rupees per month. Does not matter if it reached if it is above 6 lakh or not. If you're paying rental income, if you're paying rent amount exceeding 50,000 rupees per month or part of the month, in that case, TDS is required to be deducted. There is no 6 lakh provision given in the act. Okay, 6 lakh, where this figure came from, 50,000 multiplied by 12. So please do not consider it. It is 50,000 per month or part of the month. Okay. Now, since I am a salaried employee, I'm paying this rent to someone, and the rent amount exceeds 50,000 per month or part of the month. It is not good now. Like, it is not good for me to deposit this TDS on regular basis. So for this type of assessees, basically for category 1 assessees, the government says, okay, you're paying the rent amount, no worries. You can deposit this TDS either in the month of March or maybe in the last month of tenancy. Either in the month of March or maybe in the last month of tenancy, even if you're depositing this TDS at this time, still it is okay. So if you refer this section, time of deduction for category 1, where the persons which are other than specified persons are basically at the time of payment of credit, whichever is earlier for the last month of tax year or last month of tenancy. I hope it is clear. However, for category 2 persons, basically if any company is paying rent to any organization, to any entity, to any other person, in that case, for the companies and for the specified persons like individual HF having business income or professional income exceeding 1 crore 50 lakhs in the preceding financial tax year. So in that case, they are required to deduct the TDS on regular basis at the time of payment of credit, whichever is earlier. The threshold limit is 50,000 per month or part of the month. And let me just underline this statement that it is not 6 lakh rupees per annum. It is 50,000 per month or part of the month. Okay. So let's say if there's an individual who is paying 60,000 per month and he has paid the whole rent for the whole year, basically for the 12 months. So 60,000 multiplied by 12, it would be 72,000, 7 lakh 20,000. 7 lakh 20,000. The TDS rate would be 2%. So the 2% of 7 lakh 20,000 would be 14,400. He is required to deposit this TDS by the end of March or maybe in the month in the last month of tenancy. And for category 2 persons, if you have taken the machinery or equipment on rent, then in that case the tax rate is 2%, the TDS rate is 2%, and for land, building, furniture, fittings, etc., it is 10%. So basically, let's say if we talk about the companies, and if I've taken any premises on rent, and since the premises is basically part of land or building, etc., including the factory building, in that case, I'm required to deduct 10% TDS. Okay, in that case, I'm required to deduct 10% TDS. I hope it is clear to every one of you. The concept is same in section 194I as well. There are no changes. However, the way they have explained section 194I versus section 393 is quite different. Like, for example, if we refer to section 194I, the category 1, the whole definition is given, right? Any person not being individual HF. For individual HF, the total sales exceeds 1 crore in case of business, 50 lakhs in case of profession. It is all given in the section itself. However, when it comes to section 393, I have to refer to another section for me to understand the definition of a specified person. That is the difference when it comes to the TDS provision related to rent. So there is no specified person when it comes to section 194I as per Income Tax Act 1961. Rest is same, the deductee is same, any resident, time of deduction is same, threshold limit is also same, and tax rate is also same. Nothing has been changed. Just the way we have presented the section is quite different when it comes to the Income Tax Act 2025 versus 1961. Is there any criteria, or maybe is there any thing given in which the TDS on rent is not required to be deducted? The answer is yes. What is the scenario, or what is the case where the TDS on rent is not required to be deducted? So what happens, I still remember, I mean, when we talk about section 194I, we all are aware that, okay, we have to deduct the TDS. However, do you know if any REIT is basically your business trust, real estate investment trust, if they are receiving the rental income, then the TDS is not required to be deducted. And it is given in section 194I as well, and also in section 393, which I'm talking about, of Income Tax Act 2025. So if we refer to section 194I, there's this one proviso is given which says that no deduction shall be made under this section, that no deduction shall be made under this section where the income by way of rent is credited or paid to a business trust. So basically, if I'm giving rental income to a business trust, being a real estate investment trust, then in that case, the TDS is not required to be deducted. The same is given into the section 393 as well of Income Tax Act 2025. However, again, as I said, we are all about tables, tabular formats when it comes to this Act 2025. The language is quite simplified now. So it says, there's this one section 393, subsection 4, it says, income by way of rent credited or paid to a business trust, being a real estate investment trust in respect of any real estate asset referred to in Schedule 5, owned directly by such business trust. So if any business trust, REIT, is basically holding any asset, capital asset, and if they're receiving rental income out of it, then the TDS is not required to be deducted. And it is mentioned in Schedule 5. Now, what is Schedule 5? Schedule 5 talks about income not to be included in total income. Schedule 5 talks about income not to be included in total income of certain eligible persons, including investment funds, business trusts, and their unit holders, as you can see. So basically, whatever the rental income is paid to business trust, the TDS is not required to be deducted. In short, this is the summarized version of it for TDS on rent. I hope it is clear to every one of you. Let's talk about TDS on professional fees or technical services. So for TDS on professional fees or technical services, there's a section 194J as per Income Tax Act 1961. Whereas if we refer to the corresponding section of the same concept, this is section 393 again, but in tabular form, this is 1 point serial number 63, which I have considered. Okay, serial number 6 is basically all about contractor. Basically, they have merged 194C plus 194J in this serial number 6. But right now, what I'm doing, I am considering only serial number 6.3. Okay. Now, when we talk about deductor, deductor is my specified person. Deductor is my specified person. And as I said, for me to refer what is a specified person, we have to refer section 402 clause 37, where it says specified person means any person not being an individual HF. Any person not being an individual HF. That is companies, etc. Right? For individual HF, I have to check whether my total sales gross receipts turnover exceeds 1 crore in case of business. And in case of profession, I have to check whether it exceeds 50 lakh rupees during the tax year, immediately preceding the tax year in which such income is credited or paid. Basically, for the previous year, I have to check. Preceding tax year, I have to check. Right? Yes. So, deductor is a specified person, and the specified person, as you all are aware now, that it is any person not being an individual or HF, or in case if it is individual HF, we have to check the preceding tax year income, not income, I would say sales, gross receipts, turnover, if it exceeds 1 crore rupees in case of business and 50 lakh in case of profession. However, if we refer to section 194J specifically, it says there's no specified person. Obviously, there's no reference to the specified person. The whole definition is given in the section itself. The section says category 1, any person not being individual HF. कोई भी person हो individual HF को छोड़कर, आप company हो सकता है, कुछ भी हो सकता है. In case of individual HF, it is total sales gross receipts turnover exceeds 1 crore in case of business or 50 lakh in case of profession. So basically the definition is same. However, in case of section 194J, it is specifically mentioned. The whole definition is mentioned in the section itself. For Income Tax Act 2025, we have to refer to the definition of specified persons as per section 402, clause 37. What is the tax rate? And the tax rate is 2%. 2% in case of fee for technical services. Royalty in the nature of consideration for sale. Distribution or exhibition of cinematographic films. And for the payee who are engaged into the business of operation of call center, in that case, the TDS is required to be deducted at the rate of 2%. If you remember, then in earlier, the TDS we used to deduct under section 194J over and above 30,000 rupees, right? So 30,000 se upar we had to deduct the TDS. However, the limit have been increased last year. It is now 50,000. So if somebody is getting, like if any individual is getting professional income exceeding 50,000 rupees during the whole year, in that case, the TDS is required to be deducted at the rate of 10% in case of professional fees. Other than director remuneration, because for director remuneration, there is no limit. You have to deduct the TDS. Even if you're paying, let's say, 1,000 rupees, 2,000 rupees, you have to pay the TDS. What are the cases where no deduction is required? What are the cases where no deduction is required? So basically, if any sum is credited or paid by individual or HF, exclusively for personal purposes. So if there is any individual HF, if he's paying any professional fees or maybe technical services, fee for technical services for personal purpose, in that case, no TDS is required to be deducted. There's a section 393, subsection 4, which talks about the cases where TDS is not required to be deducted. So as per this section 393, subsection 4, there's a serial number 9, which says that if you're making the payment as for personal purpose, in that case, no TDS is required to be deducted. Now the question comes, what is professional services? What is technical services? Right? Professional services, the definition of the same, we can refer it from section 402, clause 28. 402, clause 28. It says, professional services means services rendered by a person. Professional services means services rendered by a person in the course of carrying on legal, medical, engineering, or architectural profession, or the profession of accountancy or technical consultancy, or interior decoration or advertising, or such other profession as may be notified by the board for the purpose of this section or section 62. If somebody asks me what is the difference between professional services and technical services, it's basically professional services. Basically, I can say it is performed by an individual like VCAs, advocates, lawyers, and interior designers. These all are professionals, right? So, as per section 402, clause 28, the definition is same as per Income Tax Act 1961 as well. There is no change in this definition. It simply says that professional services means services rendered by a person in the course of carrying on legal, medical, engineering, or architectural profession, or maybe the profession related to accountancy or technical consultancy, interior decoration, or advertising of such other profession as may be notified by the board. Okay. Then what do we mean by technical services? If we refer to the definition of technical services, it is mentioned in section 9. And to be very honest, section 9 of Income Tax Act 2025 and section 9 of Income Tax Act 1961, both are same. Section 9 of Income Tax Act 1961 is income deemed to accrue or arise in India. And same goes with this section. It is income deemed to accrue or arise in India. And for this, we do have this fee for technical services definition is given. It says that it means any consideration. It can be a lump sum consideration for the rendering of any managerial, technical, or consultancy services, but does not include any consideration for any construction, assembly, mining, or like project undertaken by the recipient, which would be income of the recipient chargeable under the head salary. So if you're paying someone a salary, then in that case, we are not going to include the same. But if somebody is providing you the technical services related to managerial, technical, or consultancy services, is basically, if we are rendering these services, then in that case, that would be part of technical services as per section 9 of Income Tax Act 2025. And this is the last TDS related section I'm going to take up right now because of and followed by we are going to take the Q&As. So let's talk about TDS on commission and brokerage. So if we are earning any commission which is not related to insurance commission, and whatever the commission we are earning, let's say it is related to sales, okay, not related to insurance, but sales commission. Suppose if you're selling any products and items, you're receiving this commission. In that case, the threshold limit is 20,000. Okay, and if you're receiving this commission over and above 20,000 rupees, then the specified person is is basically the deductor. And deductee, we have our, let's say, any resident. In that case, the TDS rate would be 2%. So suppose if somebody is receiving commission from a company because he's selling some products, etc. In that case, this company is going to deduct, if the amount exceeds 20,000 rupees, in that case, the company is going to deduct TDS at the rate of 2%. Okay. And the deductor is a specified person, as we all and we all are aware. Who are a specified person? Any person not being individual or HF. And in case if it is individual HF, then in that case, if it's income from business, I mean sales, gross receipts, etc. If it exceeds 1 crore rupees in case of business and 50 lakh rupees in case of profession in the preceding tax year, then that person is a specified person. So this is basically, these all are the provisions which we have covered, and I'm sure there are many sections which we have not covered in today's session. But yes, there is more to understand to these TDS related sections. Sumit, if we have any questions, etc., then we can take up the same.
Yes, ma'am. Thank you, Shivangi, ma'am, first of all, for wonderful execution of this webinar. We have queries from the participants. Just go through the same. So, ma'am, there is a query from the participants. From which date, that is assessment year, section 194T is applicable?
Section 194T.
So I think it might be regarding the partner's remuneration.
But this is related to Finance Act 20. Oh, okay. Can I check the same? Okay, let me just. For partner's remuneration, it is applicable from. Okay, I had this. It is applicable from this financial year 25-26.
And ma'am, another query is there any change in rate of deduction of TDS in the IT Act 2025?
Rate of
Is there
reduction.
any rate of reduction of TDS in IT Act?
So basically, whatever the rates have been changed is they have introduced in Finance Act 2025, and they were retrospective amendment. So yes, the rates have been changed. The threshold limits have been changed, applicable for financial year 24-25 as well.
Another question is nil TDS returns whether required to be filed or not.
So if we go to the traces portal, then there's this one thing, like we can submit a declaration. It is not required, but you can submit a declaration that yes, in the traces portal, there's this one option where we can submit a declaration for the same.
One more question, ma'am. Thank you. Is there any TDS deduction required to be done on sale of agricultural property by buyer? The sub-registrar are not asking for the deduction tax paid challan and statement before the registration.
I didn't get this question. I'm so sorry.
So, ma'am, so in case of sale of agricultural land, the question is what I understood is that sale of agricultural property by the buyer, those who are buying this property, should they are supposed to pay TDS on it or not? That is the question.
In case of sale of agricultural land, right?
Yeah.
In case of sale of agricultural land, it is not required because obviously the income is exempt.
See, because of that the limit of 50 lakhs, that this question might have come up.
Okay, if the limit exceeds 50 lakh rupees. Okay.
Yeah.
If we refer to the section 194 IA, okay, let me just show you the screen. Okay, let's see the Bayer Act. Okay, just give me a second. So I hope my screen is visible to every one of you, right?
Yes.
So if you refer to this section, as you can see, it says other than agricultural land. Can you see this?
Yes. Correct,
So
correct,
even
ma'am.
if the limit exceeds 50 lakh rupees, still the TDS is not required to be deducted. That's very simple.
Because of this not being a capital assets.
Yes, exactly.
Correct, ma'am. Okay, ma'am. Ma'am, one more question is TDS from salary not deducted, then can we issue Form 16? Same can reflect in Form 26, 26 AS and 26 AIS.
If TDS on salary is not deducted, then still we can issue this Form 16. There's no such issue with that. But obviously, when we will be submitting the return, like if you're using any software, it will show some error, like you have not deducted TDS. Then you might receive a notice from the income tax department. Because we have received the same earlier in one client case, in one case, in one case of one, in one of our client.
Then one more question: what is the TDS rate for international uh, composite works contract as per new act? What is the rate for international composite works contract as per new act? I think the query is not clear.
We need to check this section 393 only, and basically, if we refer to the section, I mean Income Tax Act 1961, there's a section 195, and if you refer to section 195, there are many rates which are basically rates in force. If you refer to specifically this section, for there's a section 393 where payment made to resident is given, and for this specific query, I really need to check the same where this work contract we are actually talking about, and the nature of the transaction needs to be checked. Only then I would be able to confirm the tax rate.
Right. Ma'am, one more query is regarding any benefits for TDS provisions to be complied by individuals and HFF as in the previous act. So, is there any benefits of new tax over the old regime? That may be the question to individuals and HF.
Um, I didn't get this question. I'm so sorry.
See, another question is any benefit by individuals HF as previous act.
So your voice was breaking. So I think whatever I have heard is basically, is there any benefit to the individual HF if we if they
Yeah.
opt for what it's if is there any benefit for individual HF? If you could just repeat the same, then that would be great.
Considering the
So your voice is not audible. I'm so sorry.
now is it audible? Hello.
Yes, it is now.
Yeah. Ma'am, the question is, as compared to the previous Income Tax Act, that is 1961, is there any benefits to individuals or HUF in the new act? That is the question.
Okay. So there's no benefit for the individual HF. I mean, the act is almost same because all the provisions which have been amended by as of now by Finance Act 2025, you would find almost all the provisions are similar into this new act as well. So when it comes to the benefit, prima facie you won't find any benefit as such. But yes, obviously the slab rate have been changed, so this is something which you would find. But otherwise, There is no such benefit. I mean, that's my opinion, I would say.
Okay, ma'am. Thank you. Can we have the system? The question is that can we have the system of TDS to be paid in advance, just like cash ledger in GST, and TDS liability to be adjusted on filing of return? Interest to be calculated by system and not to allow filing without full payment. That you,
Your voice is breaking, sir.
you have this query panel with ma'am, query section is there with you or not?
I think the
You
query
have
section is
this
saved with me. I cannot see the query section. I'm so sorry.
question.
If you can just,
I'll just repeat once again.
yeah.
Yeah, I'll just slowly I'll just explain. Can we have the system of TDS to be paid in advance, just like cash ledger in GST? First question. And TDS liability to be adjusted on filing of return. So, ma'am, we have the system of we are paying in advance and we are adjusting. So, do we have that kind of system in TDS while filing the TDS return? Will we pay it in advance and we will adjust it from that?
So
That is
basically,
the
we can,
question. That is what
yeah.
I understand.
Okay. So we can pay the TDS in advance, obviously. And there's this one, if we refer to the Traces website, there's this one thing called unconsumed challans. So if we deposit the challan, then obviously, let's say if we have deposited a challan of, let's say, 1 lakh rupees, okay, but
Hmm.
and we have deposited the same in advance, then I have utilized, let's say, 20,000 rupees or maybe 40,000 rupees. Now, out of this 40,000 rupees, out of 1 lakh, 60,000 is unconsumed. Then for the next return, which I'm going to file for the next, let's say, quarter or something, that and then I can utilize this unconsumed challan for my remaining payments. So specifically, if we refer to this GST perspective, from the GST perspective, obviously you won't find a specific section, or I would say on the portal or something like this. But yes, on Traces portal, there's this one section called unconsumed challan, and you can utilize the same while filing the return. So yes, the TDS can be deposited in advance, and then you can utilize the same.
Thank you. Ma'am, one more query is that in some cases, employer reports salary and same not paid for the year.
Yes.
And then TDS to be deducted and reported in Form 26 AS.
So TDS is required to be deducted, obviously, at the time of payment when the salary is paid. And if the salary is not paid, then in that case, the employer is not required to, is basically, they should not file the same into their return.
So
However, if
the question is what I understand is that question might be that if you make the provisions, then it has to be paid at the time of I mean, salary be deducted at the TDS to be deducted on salaries at the time of making the provisions or at the time of making payments to the employee is the question.
at the time of making payment to the employee.
Okay, so on provisions it is not required to be paid rather.
Yes. If we are creating a provision, let's say as of 31st March, we are creating the provision, then TDS is not required to be deducted. However, if you refer to any company, etc., we do we do deduct the TDS, etc. But yes, as per like if we go to the theoretical provisions, then obviously the TDS is required to be deducted at the time of payment.
Correct. There is one more query that TDS deducted in old income tax act only if withdrawal prior to completion of 5 years of service. So in new tax also, 10% of TDS will be deducted on withdrawal of more than 50K only if it is withdrawn prior to completion of 5 years service. Or did they remove 5 years condition in the new income tax? That is only questions.
Fire of service. If you can just repeat the same, sir. I'm so sorry.
I'm again repeating, ma'am. TDS deducted in Old Income Tax Act only if withdrawal prior to completion of 5 years of services.
5 years of
TDS
service.
deducted TDS deducted in Old Income Tax only if withdrawals prior to completion of 5 years of service. So in new tax also, 10% of TDS will be deducted on withdrawal of more than 50K only if it is withdrawn prior to 5 years of completion of 5 years of service. So is there, so did they remove the 5 years conditions in the new provisions? That is the question.
Okay. So if we refer to the section 392, okay,
Right.
let me do something. Just give me a second. Just give me a second.
Yeah, ma'am. Take your time. No problem.
My screen is visible to all of you.
Yes, ma'am.
I think what you're seeing is basically the TDS on commission, right? Huh?
Withdrawal prior to 5 years of service.
So basically, it is not removed, okay? But if I show you this to you, just give me a second.
But the questions is not clear. It is with respect to what?
Okay, so
Withdrawal.
basically, yes, basically what happens if we are withdrawing the amount before 5 years of continuous service, in that case, TDS is required in case of EPF withdrawal. Okay,
Yeah.
but
Yes, it has
after
to be.
yes, after 5 years of service, the TDS is not required to be deducted. The point is, let me be very clear. The 5 years provision is basically whether it is chargeable to tax or not. So if you all remember, I mean, if you are aware, then if we are withdrawing the PF amount, if we are withdrawing the PF amount, is the 5 years provision is basically talks about whether the taxes needs to be calculated on this
Right.
income or not. It is nothing related to this TDS part,
Correct, ma'am.
right? So yes, the TDS is required to be deducted, but whether it is taxable or not, that depends upon the 5 years provision.
Okay, ma'am. Thank you. Ma'am, another query is any changes in TDS procedures as to deductions, timing, its deposits, return filing, certificate issuance, etc.
Okay,
Any
so
changes
as of
in this TDS procedures?
okay, so I'm being very honest, okay, here. So I'm still working or basically on these aspects, whatever the changes have been made. But as of now, I've not find any changes right now. But yes, since I'm already preparing all these PPTs, etc., so I would be able to confirm the same once I am completely like okay with all the concepts which I would end up reading. But right now, prima facie, there are no such changes. But yes, I need to work on it. Like
Yeah.
I need to work on it.
Fine, fine. So, ma'am, what is the time limit for TDS in case of house rent paid to individual? That is a question. What is
House
limit for TDS? What is limit for TDS in case of house rent paid to individual?
fifty
So I
thousand
think
per
it,
part of the
yeah,
money.
We don't have to
absolutely.
write.
Uh, uh, we welcome, ma'am, before we'll take up further queries, we are fortunate to have with us CA Piyush Sajid sir, our Directors Committee Chairman. So, sir, Piyush sir, we welcome you here. It's our privilege that you are here on this session and you are already there on the conferences. Sir, we welcome you here. So, sir, regarding Piyush Sajid, sir, I'll take 2 minutes of yours before we'll take up FAQs further. Regarding CAP Sajid sir, uh, he is an expert in litigation and advisory. Sir has made significant contributions to the finance and accountancy landscape on both the national and international levels. And uh, yes, notably, he was a member of Central Council of Institute of Chartered of India from 22 to 2025, and for second term from 25 to 29. Within the ICA, he has served all three pivotal standing committees, that is executive, examinations, and finance, showcasing his many-faceted understanding of the profession, ma'am. He is currently chairman of Directors Committee and vice chairman of Expert Advisory Committee. He was a member of working committee of the Asian Federation of Accountants, and he is
Sumitji,
currently. Yes, ma'am. Yes, sir.
yes, please. Very short introduction. You can go ahead. I can.
Yes, yes, sir. Yes, sir. Sir, your contribution is such that whatever we say is very it cannot be described in words. Rather, sir, your contributions to the Vivad Se Vishwas scheme. You have contributed for FAQs on charitable trust published by the Jain Chartered Accountant Federations, that is the JCF. And sir, you are there on the different sectors, the different organizations. Rather, you are actively engaged in various trust organizations where you are serving as an independent director, honorary board members, honorary vice presidents, and trustee in different capacities. So, sir, we welcome you here on
Sumitji,
this.
yeah.
Yes, sir. So, sir, we welcome you
Thank you.
here, sir.
I hope I'm.
Uh,
I hope I'm
yes,
audible.
yes, sir. Yes, sir.
Yes, probably I'm in a poor network, so my video is not working. But
Right,
very
sir.
good evening to all of you. The chairman and the moderator of this session, chairman of API branch, she is Sumit Doshi. The speaker for this, she is Shivangi Mittal. Thank you very much to both of you for joining us and working for the cause of the profession under the Direct Tax Committee, and to all the members. Obviously, I could not join early because we had some conference going on in Bombay Physical on corporate law governance. And I was studying one of the particular session on related party transactions, which is always a very important subject, whether it is a Companies Act or whether it is an Income Tax Act or 1961 or Income Tax Act 2025. I'm sure, Shivangiji, I was just watching on the WhatsApp, and I would happy to know that more than 2,000 people were viewing this session who had joined, which speaks about the volume of the presentation which has been done by you. Thank you very much to all of you. And at the time when people are already busy with the income tax, when we had actually fixed up this session, and I was speaking to my vice chairman Vishnuji, I was saying, yeah, is it the right time to talk about Income Tax Act 2025 at the stage when people are struggling for filing the returns under the old law? Or we should do it after 15th of September. But I'm sure the way the people have responded speaks about the your deliberation on the subject. My only very shortly, I would just like to tell you, because a lot of messages are coming to all the audiences. A lot of people are asking what is going to happen, whether the due dates for 15th of September or 30th of September will be extended, what is going to happen. Just to briefly tell you, the last week itself, we had certain meeting with the member legislation board members, and obviously, we had not given any, institute has decided that we will not seek any extensions officially, or will not seek extensions in writing from any of the members since the last 2 years, and we are not doing that. Because we should not be sought as if we are seeking extensions, and we are always there to support the government, which I've always briefed the members also that our role in Income Tax Act 2025 was from the day when it was envisaged by the Ministry of Finance, and before that, even Honorable Finance Minister, we were there in the making of it. We were there while after been presented at the Lok Sabha also. So keeping this thing in mind, where you are already involved on a day-to-day basis, our representations have been looked into it. We thought we will not represent it, but officially when we were personally meeting to the member legislation, this issue did came up. That what's going to happen. I know there is a difficulty as far as tax filing is concerned. ITR fire utility is not still seeing the day of light. So all these issues have been already told to them. As far as tax audit is concerned, Form 3 series utility is expected expected to be revised, because you will not find certain clauses like 29A in the utility, though they are appearing in the notified forms. So all those issues have been brought to the notice of the board members also, and considering, and they're positively taken into that also. Even in fact, calculation of long-term capital gains is still an issue. Calculation of 54FA also is an issue in an utility. All those we have physically represented and given in writing also. And considering that, I believe that something positive should come up. Of course, I cannot say anything because I'm not part of it. But obviously, I can only tell that yes, something positive is expected. But my request to the members is obviously, if we are able to complete it, we should complete it. It's a time that at least after 30th September, I am free. Otherwise, generally, when the extensions happen, out of 12 months, 9 months, you are busy filing your tax returns and audit also, and we are not able to concentrate on our self-development exercise, do trainings, attend other programs, think about other areas apart from taxation and audit. So my request to all the members would be, please gear up. Yes, it's very difficult. I do know we have do short time. There are a lot of difficulties, but yes, chartered accountants has always faced these difficulties and always has come up of those and done very well. So my request to all of you, I thought I'll just update to you because a lot of questions were there on that. Shivangi, thank you very much once again. And Sumit bhai, thank you very much. Over to you, Sumit ji.
Thank you so much, sir, for your fantastic representation of our for all the members. Sir, your contribution is really immense, and because of under your leadership, we are sure that all the members will benefit, and especially to even our government will benefit. So, sir, you are always you are for the benefit of members. You always take member will be relieved. You always take this kind of steps. Sir, we are very glad, but we are very privileged that you are heading the Directors Committee of ICA, sir. Thank you so much for your brief informations regarding this um, uh, taxation period, sir. Thank you so much. So, sir, few only one question left. So, sir, shall I take up that questions? So,
Please go ahead. Please go ahead.
yes, sir. Yes, sir. So, ma'am, now only one question left is TDS on rent is applicable on rupees 50,000 or 50,001 per month? That is only a question which is left.
50,000 per month or part of the month. So it's basically we have to check this limit on monthly basis. So let's say my TDS amount, let's say is 1 lakh rupees, okay, but I have taken this premises in mid of the month. Okay, so I have paid, let's say 49,000 for part of the month. Let's say for 10 days, I have paid less amount, 30,000 or something. In that case, TDS is not required to be deducted, even if the whole month rent is over and above 1 lakh rupees. Why? Because it is 50,000 per month or part of the month. It should exceed the 50,000 limit.
Okay. So 50,000, so up to 50,000, there is no taxation, there is no TDS. But if it goes beyond 50,000, there will be a TDS, right?
Exactly.
Yes, ma'am. So thank you, ma'am. Thank you so much for your fantastic, section. So, ma'am, officially, I'll thank everyone. So, on behalf of the Directors Committee of I take this opportunity to extend my heartfelt gratitude to our respected chairman, CAPU Sonat Sajid sir, for his constant guidance and encouragement, and to our energetic vice chairman, C. Vishnu Agrawal sir, for his inspiration and support. A very special thank today's speaker, C. Shivangi Mittal ma'am, for delivering such an insightful and engaging session. Ma'am, your ability to simplify the complex text provisions and connect with the audience has truly added a great value to all of us today. I also thank all the participants for joining us and making the sessions interactive and meaningful. Your keen interest and active involvement that makes such a webinar a grand success. With that, we conclude today's program. Thank you once again, and we look forward to meeting you all in our upcoming sessions. And we have sessions on every Thursday by Directors Committee. So members are requested to take the benefit of it. Thank you so much. Thank you once again. Thank you, everyone.
Thank you so much, sir.